So I'm seeing in my feed a lot about interest rates. Everyone's tracking the Fed just to see when the next rate cut might be, or what the news, jobs reports, everything. And I think it all ties in, surely. It absolutely has effects. But I think one of the things that needs to be put out there is that for mortgage rates, if you're looking at, hey, whether I'm going to be refinancing or whether I'm going to be purchasing and I want to see if I can get the best rate, I do think that the Fed, right, that has an indirect influence. So if they've cut rates, it could mean, a certain thing, but it might not. And what really mortgage rates are tied to is a 10-year Treasury. And I know a while ago, I remember just thinking that as like rote memorization. It's like, yeah, it follows a 10-year Treasury, got it. But then I was like, well, why? And you look into it a little bit, and then you find out that although mortgages typically are 30-year mortgages, I mean, there are some that can be 10, 15, it really does depend, but, the vast majority are 30-year. However, home buyers, I should say homeowners, they follow typically like 7 to 10-year cycles where they might own a home, and even though they have a 30-year mortgage, they might sell, move somewhere else, somewhere within that 7 to 10-year time frame. And so that's why the mortgage rates follow that 10-year Treasury, because it most similarly matches that. There's a lot more that goes into it than that. I mean, but the Fed rate is, I guess, the interbank interest rate that they're able to lend to each other, and there's other factors that could affect mortgage rates. But anyway, so to focus on that alone, right, I think a lot of people are just thinking that if the Fed cuts interest rates, that mortgage rates will fall, and that's not really the case. And so just kind of try to just do a little bit of research. I mean, I had to do some too along the way. I mean, it doesn't just pop in your brain, coming out of the womb. I mean, this isn't innate knowledge. You do have to kind of study up, ask professionals, like talk to lenders, good ones anyway, that might know the actual ins and outs and what affects the mortgage rates, and they can better explain it to you. And they can help shop around. I'm not a lender. I'm not really recommending any particular lender. I'm just saying for you, talk to one if you're looking to buy or refinance. Right now, we are looking to refinance one of our homes. But when I say looking, I don't mean that we are pressed up against a wall and we have nowhere else to go. It's just that if we want to refinance, it's fine, but we're in no huge rush to do it. The payments that we have right now are perfectly fine. But if interest rates do end up coming down a little bit or a little bit more, then sure, we'll look into it. But anyway, I just wanted to kind of share that because I've been seeing a lot being pushed out on social media about interest rates and what the Fed's doing. And like I said, yes, it has an indirect effect, absolutely, but it is not the direct link as to what brings up or brings down mortgage rates.